If you have ever opened your investing app and you see a bunch of green and red blocks floating around and you have no idea what this all means, don't stress. By the end of this episode, you will be able to read the markets like a pro, or at least bluff your way through the next braai. Hi, my name is Yolanda. I'm a wealth advisor. It is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and to build generational wealth. If you're new to this platform, please consider subscribing. I create financial content from a South African perspective. I am a fit and proper financial advisor in South Africa. However, the content that I produce is not financial advice, it's financial education. If you would want to take this financial education and apply it to your unique financial situation, I'd be happy to help you. I'm the director of Solomon Wealth Management. We are a Durban-based boutique wealth management firm, and we work with South Africans all across the country, even expat South Africans, get their money right. So if you see something interesting in this video or any of my other videos, book an appointment at solomonwealth.co.za. The first appointment is complimentary, and I would love to chat with you one-on-one. So let's get started at the very beginning. Despite all the fancy screens and trading floors, the stock market is actually pretty simple to understand. It's a marketplace, just like your Sunday farmer's market. Except instead of fruit and vegetable being sold, you can buy pieces of companies. You can buy a share of Naspers, Capitec, Standard Bank, or even ShopRite. You literally can buy a slice of that company. Now, if over time that company grows, that slice becomes more valuable over time. And that's it. That's the essence of the market. Problem is, prices don't always move in a straight line or in an upward direction all the time. They go up and they go down, mainly because of emotions. Fear, greed, panic, hope, all of this affects the markets. And this is why learning to read the market is really about understanding human behavior. So let's talk about those red and green numbers in your investing app. When a stock price goes up, it goes green because there's growth. It means that people are buying, there is demand, and the share price is going up. And when the prices go down, it turns red. It means people are selling. There is not much demand. This may be due to bad news, profit taking, or market uncertainty. Now, if you see an index being mentioned, an index like the JSE Top 40, which is a selection of the 40 biggest shares on the Johannesburg Stock Exchange, or an index like the S&P 500, which is the top 500 biggest companies in the United States. Now, that's just a big basket of companies bundled together by a certain criteria. And in the case of those two indexes, it gives us a basic idea of how that country's markets are doing. Think of it as a report card for the entire economy of that country. So if the JSE Top 40 is up by 1%, the 40 biggest companies in South Africa have gone up for that day. Simple, right? Now let's dig deeper. Why do share prices change? Well, basically, it boils down to three main things. Company performance. If a company releases great results, higher profits, new products, new markets, investors want in. That drives up demand and that drives up prices. Then there can be economic conditions. Things like interest rates, inflation rates, strength of the rand even play a role. For example, when interest rate rises, investors usually shift from shares to interest-bearing options. Why? Because interest is a guaranteed return. Equity returns are very topsy-turvy, very volatile. Then there's also investor sentiment. This one's a little bit trickier. Sometimes, well, a lot of the times, the markets move on feelings, not facts. A rumor, a global event, or a tweet can send prices crashing. And that's why professional investors don't just look at what's happening. They look at why it's happening. So how do you read a share chart without panicking? So let's talk about charts. Those scary looking graphs that seem to go up and down like a roller coaster, as you can see. This is a one-day chart of Naspers. And here's a secret about these charts. You don't need to be a trader to understand them. So this chart shows the share price of movement over time. Here, you're seeing a one-day movement. Now, you're seeing a 5-day movement. Months, like 3 months. or even years. An upward trend basically means the share is generally growing in value, while a downward trend means it's losing value. And as you can see on this chart, Naspers from 2020 to date, that's an upward trend. A downward trend means that it's losing value. So if you look at it on a 1 day period, you can see a significant downward trend. But don't panic over daily movements. Once we zoom out, we look at the big picture. Is the company growing over the long term? The case of Naspers, definitely. And that's where wealth is built. If you're investing for 5, 10, or 20 years, those small dips are just noise. Then there's dividends, that quiet bonus. And new investors often overlook this. You're mainly focused on the share price, buy low, sell high, but dividends are really a thing of beauty. Now, when a company makes profits, the board decides to share some of those profits with the owners of the company, you, the shareholder. And that's your dividend. And that's basically a thank you for being an owner. And what you need to know as a South African investor in South African companies, that dividends tax is fixed at 20%. So if you are earning a 2 million rand salary, right, on the personal income tax rate, you would be lucky to keep 1.2, 1.3. However, if you are earning 2 million in dividends, you're guaranteed to keep 1.6. So even if share prices may not be shooting up right now, dividends can still give you consistent returns. And if you look at the nature of big established companies, growth might be plateauing, but they're big established companies generating great revenue and great profits. It's like you're being paid to wait while the company grows. So now that you understand what the market is, what moves it, and how to read those charts and indices, how do you use this knowledge? Well, you got to start simple. Choose a few companies that you know and love. Maybe brands that you use every single day. Watch their share prices for a few weeks on your fintech app. Read their headlines, track their performance, and note how the market reacts. That's how you train your investing eye. Over time, you'll be able to spot patterns: when to buy, when to hold, when to sell, when to stay calm when everybody else is panicking. Remember that real wealth is not made by predicting the market. It's built by staying in the market. This video is sponsored by Brockstock. Brockstock was recently named South Africa's most innovative investment platform in 2025 by Global Brands magazine. And although this is a sponsored video, I have full creative control. All opinions, all research, and all insights are completely my own. I am a fit and proper South African financial advisor. But this video is for educational purposes only. This is not personal financial advice. My goal is to help you understand how shares and other assets work, so you can explore them further with your own advisor. And if you don't have an advisor, I would be happy to help you. Simply click on the link where you're watching this video and book a complimentary appointment. So here's a 5-step guide in how you can get the best out of Brockstock. When you're going to download the app, you can scan the code on your screen or click the link in the description where you're watching this video. Download the application, open an account and register, do your full FICA. Now that we're off the gray list, we got to stay compliant. Then you got to fund your account using your South African bank account. Check for your minimum required deposit and a reference number. Then use the app search bar to search for your favorite companies. Tap a few details like current price, a 52-week range, and performance charts. Then you choose buy. Enter how many shares or the rand value that you want to spend in buying that share. Then confirm your transaction. You can simply track and manage your portfolio on Brockstock. View your shares in the portfolio section. And you can monitor price changes and dividends over time, all from one simple app. And when you are ready, you can sell the shares directly on Brockstock and collect your money. Tap on the link in the description below or scan the code on your screen to download Brockstock now. So remember, the marketplace is just the platform for trading shares. Prices move with economic conditions, company performance, and investor emotion. Don't obsess over daily noise and daily drops. Zoom out and know your long-term goal. And remember, always keep learning, and that is why you should subscribe to this channel and share this video with others, friends and family that need to hear it. The best investors are not the smartest. They're the most patient. I hope today's episode gave you some clarity on what you should look for when trading shares. Watch the next video coming up to know more about investing from a South African perspective.